Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to today's Top Stock Picks. I'm Jeremy Mullen, and I will be doing Martin Marietta Materials. Brian Bowen will follow me with his pick, but first, let's dig into ticker symbol MLM. Martin Marietta is a Zacks ranked number 2 buy that produces and supplies construction aggregates and other heavy building materials. The stock is trading just below all-time highs and is up over 30% on the year. Strong earnings momentum and rising estimates due to product demand from public investment are helping the stock higher. While it's hard to chase a stock like this, investors should be watching for opportunistic entry points on any market pullback. The long-term momentum likely continues for MLM, and this stock could be a great place to reallocate money from the hot tech sector. Now let's look a little bit more about the company, talk about the earnings, estimates, and then look at the charts. Okay, here is the profile page for Martin Marietta Materials, MLM. Well, some factoids about the company. Martin Marietta was founded in 1939 and is headquartered in Raleigh, North Carolina. The company is involved in non-residential and residential construction markets and offers crushed stone, sand, and gravel products, ready-mix concrete and asphalt, paving products and services, and specialty cement used for infrastructure products. Now, looking at this, we see the Zacks rank number 2 buy. We see Zacks style scores of C in value and momentum, but B in growth. Scrolling down here, we see have a market cap of $28 billion and a dividend of about 0.5%. The PE is 28, so not too high, but the valuation is in question for some investors. We have a C, but the hope is that the company continues to grow into any valuation. So in order to do that, we need to have good earnings. So let's take a look at those. Here is the price and EPS surprise chart, which is one of my favorites. And if I just hover my cursor over here, we can see 118% EPS beat. Now, this is a rather large beat, and which is why the stock went to new highs. Looking at closer to that quarter, it was the Q1, and it came in at $2.16 versus the 99 cents expected. Revenues were $1.35 billion versus the $1.19 billion expected. The company adjusted its fiscal year 23 outlook, seeing EBITDA at the higher end of the expected range. Management cited solid near-term product demand as a reason for the big quarter. The company saw healthy customer backlogs across their footprint, which was led by infrastructure and heavy non-residential project scale. And here's the key. They expect recent legislation and public investment to offer continued demand for several years. So they are expecting this positive earnings momentum to continue. This was their second beat in a row. And, looking back over the last couple of years, they had a rough run here where it was kind of mixed from quarter to quarter. And that was after this nice run in 2020 into 2021. So hopefully for the bulls, we can get another run like this where you can continue the stock higher. Let's look at those estimates and see what the analysts are expecting. Okay, we scroll down here. We can see on the short term, estimates are going up, but they're not going up a lot, okay? We had that good quarter, and they revised down a little bit. Next quarter, kind of wishy-washy here, back and forth. But if you focus on the longer term, this is really going to see some meat on the bone. We have 8% moves in both the current quarter and next year. So for the current year, we have 1482 to 1604. For next year, we have 1702 to 1838. So those are some aggressive estimates, hikes for a company like this. With that, since earnings, we've had multiple analysts take price targets higher. Some of the more bullish firms include Citigroup and Goldman Sachs. Citi reiterated MLM with a buy, moving their price target from 460 to 527. Now, Goldman, even more bullish, reiterated their buy rating and lifted their target from to 553 from 489. So they're all the way up at 553. Now, let's look in the charts and see how we might get to those Goldman targets. So looking back to COVID, you can see the COVID crash there, and the stock really had a nice grind higher as it continued to beat on earnings. And then we see this kind of sideways consolidation as they struggled back and forth to hit estimates. So one of the things I like to use to find price targets is Fibonacci retracements and extensions. If you guys know me, I do this all the time. From these highs to the lows, we had a halfway back that was sold, and then extended up to the 61.8, sold again. So 4 times this zone was sold, made lows, but into these earnings, we accelerated higher, broke the 61.8. And whenever this happens, I look for the 161.8 extension as a target. So this is kind of lining up with those Goldman targets. And, if this momentum continues and they have more positive earnings and the market stays bid, we can definitely see this into the end of the year. Now, let's say the market pulls back, and I know not everybody likes to chase and buy all-time highs. They want to look for pullbacks to buy, and that's fair. We could see a market pullback, and that could surely happen. So the green line is a 21-day moving average, blue is 50, and the 200-day moving average is way down here at 368. You can see this 21-day moving average has been the spot to buy. I mean, it's held up here, and once again, in the recent pullback, it held up. So this has been a good entry point for short-term traders. Now, if we get a larger market sell-off, likely stops get taken out, and we revisit the 430 area. So that would be a spot to look at for support. But you bargain shoppers, what I would want you to look for if there's a larger market sell-off is from these lows to highs, give us a 390 to 404 buy zone. And this might take some time, so this 200-day might end up lining up with that. That's one of my favorite setups out there. I would look for that, and then possibly late in the year or next year, a move up to that 500, and then perhaps get Goldman's aggressive targets later in the year if the market were to continue higher. While Martin Marietta has had a big run this year, there are both technical and fundamental reasons for this. When a stock trades at all-time highs, there is price discovery above, which is what MLM is going through right now. On the fundamental side, strong demand led by public investment will be a tailwind for revenues over the next few years. Investors with profits from the big tech run-up might want to keep MLM on their watch list and buy any pullbacks into technical support. The stock likely stays strong until year's end and is a great way to diversify away from the tech sector, which in my opinion is a bit overdone. Okay, that's it for me and my pick. Here is Brian Bolin with his.
Thank you, Jeremy, for that. And let's go ahead and get to my top stock pick for the week. It's Meta. So yeah, Meta Platforms, META is the ticker. It's a Zacks rank number 2 buy with a B for growth, C for value. I love growth stocks, so I've got a little bit stronger, growth name right there. Here's the reason why I'm picking this on top stock picks of the week. It's reporting earnings later this week, so be very aware of that. And if we take a look at this chart right here, beat right down here 3 months ago, and nonstop runaway train here running up, but recently giving it back a little bit. Maybe a little too much euphoria in the name. Let's go ahead and go through our normal set of numbers, see what we think. All right, so we got a couple misses, very small miss there. Not so good of a miss. That's not so good. 12%. A nice solid beat, and then last quarter with that big move, a lot of stocks had big moves at the end of last quarter after solid beats. Let's take a look at where these estimates are going for the book. That's what we used to call it. It's now the Meta. Maybe it's Threads. Who knows? I don't even know what they call it anymore. It was 287, went down, and then back up. So we're going to call that a neutral. Next quarter, inching higher, 297 to 299. Full year, kind of flat here, 1204 to 1203 of a penny. That's no big deal. Next year, really, they're kind of, it looks like they're going to add in some ad revenue growth on maybe Threads. Who knows? Threads, of course, being that Twitter competition thing. Here we have the full year. We're looking at 9.5% top line growth, and next year accelerating. That's good to see always. Let's jump over to the financials and see where we are there. 24 times forward earnings, which is quite a bit. 6 times book, which is a lot, but I'll tell you what, it's an asset then sort of deal because it's all online. So what are you going to do there? Not much growth last quarter. What are you going to do? The margins hanging out in the 20s. That's great to see. Obviously, this is a very large company, one of your big ultra mega caps. Let's take a look at that price and consensus line, and then we're going to just talk about earnings real quick. So down. Things are ugly. Metaverse, that's all that. Metaverse, big spending in that, and it really did not get any traction. Then we kind of cleaned up ship. We lost some employees. We made our profit structure a little bit better in doing so. And we've also launched Threads recently. I just my quick thought on Threads, I think it goes nowhere for quite a while unless they do something drastic. Who knows what that is, but lots of signups, lots of interest, but then all activity kind of fell off the face of the earth. I'm going to be very weary about this stock continuing to press higher given everything else that's happening. We do have the FOMC later this week. There's a lot of built-in optimism here, as we can see these earnings estimate lines just, launching like SpaceX rockets, if you will. So I'd be pretty worried about this. We did see 20% moves in names like Facebook, Microsoft, everything over the last quarter with the IA craze, AI craze, not IA. I'm an unintelligent artificial. That's me, UA. So I would be a little bit wary, but at the same time, it's a very important stock and one that I want to keep my eye on. Well, that was a lot of fun. Be sure to join us next week when we have 2 more top stock picks for the week. And until then, why don't you go to Zacks.com/promo for all of our latest promotions.